I want to bring in now market panel, the great Eddie Ghabour and Kim Forrest. Eddie, the street sees now apparently 4 rate hikes. Also, the balance sheet runoff begins at the end of the year. So what does this mean for long-term investors in your mind?
So look, long-term investors, I think right now need to focus on the quality of their portfolio. As you know, Charles, I've been sharing the last 2 months, we've been very active in selling into strength on some high beta names and rotating into more quality and defensive names. And I think long-term investors need to be focused on the long-term, of course. But look, our clients also pay us to see when we see phase transitions happening in the economy and we feel as though there's some potential big drawdowns to start playing defense. So expect a lot of volatility, especially in the second quarter. The first half of this year has me most concerned with those high beta plays.
What do you guys say about these ISM numbers? Service today, manufacturing yesterday. Just if you peruse through them, it suggests maybe inflation could be peaking. And if that's the case, Eddie, what does that mean for this market? Is the Fed overreacting? Is the market overreacting?
So here's the thing. I actually am in the camp that inflation has peaked. I don't think that's consensus, but I think it's peaked. I also think economic activity has peaked. So the problem we have right now is the Fed has delayed the tapering and tightening to the point where now they're going to be forced to do it during an economic slowdown. We're not going in a recession, but when you have peak economic activity and you see GDP decelerating and the Fed is tightening, that really is a bad recipe for your higher risk plays, and that's why we've really gone extremely underweight those asset classes.
Eddie, what are you looking at?
So look, the biggest risk and the biggest fear I have is if the rate of change in GDP in the second quarter goes really, really low. Because if you look at the comps the second quarter last year, those are really tough comps. We're not going to come close to getting them. But if the consumer tightens up because of inflation and we see a big drop in GDP while the Fed's tightening, that's where you see the massive sell-offs.
Eddie, is there one stock you're pounding the table on right now?
My favorite sector right now is real estate, Charles. Rents, in my opinion, are lagging indicators in regards to when appreciation has gone up the way it has. So I think the next 12 months for real estate, we bought it yesterday, we bought it today. We think that has great upside this year. And I did put a new position on for clients today, the first time in a while. We actually bought gold today.
Eddie, Kim, Happy New Year to both of you.